What if the numbers you trusted were never real? What if the charts you saw, the growth you celebrated, and the success stories you admired were all built on a lie? We live in a world where data is king. We're taught to trust the numbers, to believe in the charts, and to follow the upward trend. But what happens when the numbers are nothing more than a carefully crafted illusion? It's a fundamental part of human psychology. We trust numbers more than we trust people. Show someone a soaring chart and their skepticism melts away. Flash a screenshot of impressive revenue, and suddenly you're an authority. In the fast-paced world of startups and tech giants, a steep growth curve isn't just a metric, it's a validation. It's the story that says, we're winning. We're the next big thing. This universal language of numbers is so powerful that it can make or break a company's reputation in an instant. It's what secures funding, attracts talent, and captures the public's imagination. We see the rising line on the graph, and we believe. We see the big revenue numbers, and we invest. It's an almost hypnotic effect. But this deep-seated trust in data is also a vulnerability, a blind spot that can be exploited by those who understand its power. The story of success is often written not in code or in product, but in the spreadsheets that no one ever questions. And that's where the deception begins. Let's pull back the curtain on the illusion of growth. It often starts small. A little tweak here, a slight adjustment there. Maybe it's faking user metrics. Instead of real, active users, you have bots, or you count every single sign-up, even if they never log in again. Suddenly, a user base of 10,000 looks like 100,000. The chart looks fantastic. Then comes the inflated revenue projections. You take your best month and project it out for the entire year, conveniently ignoring seasonal dips or market volatility. The numbers look incredible on a slide deck, even if they have no basis in reality. It's about creating a narrative. And the timing of announcements is everything. You secure a small partnership, but you announce it as a strategic alliance right before a funding round. You release a minor feature and frame it as a game-changing product update. It's all about perception. These aren't just white lies. They are carefully constructed deceptions designed to paint a picture of unstoppable momentum. The goal is to make the company look so successful, so inevitable, that no one dares to look too closely at the details. They're not selling a product. They're selling a story. And the most compelling stories are always the ones with the most impressive numbers, real or not. So how do savvy, experienced investors get caught in this web? It comes down to one of the most powerful forces in human behavior: FOMO, the fear of missing out. Imagine this scenario. A hot new startup is raising money. The founder shows you a deck filled with incredible growth charts. Then, they casually mention that a top-tier venture capital firm is leading the round. Suddenly, your own due diligence feels less important. If they're in, it must be a good deal, right? This is the everyone else invested effect. It creates social proof and immense pressure. No investor wants to be the one who passed on the next unicorn. The conversations become less about scrutinizing the data and more about securing an allocation. Founders might create what are called pressure rounds, suggesting that the funding round is closing soon and is heavily oversubscribed. You have to make a decision now, or you'll miss out. This manufactured urgency short-circuits the normal process of critical thinking. The fear of missing a massive return outweighs the fear of losing the investment. In this high-stakes game, emotion often trumps logic. The illusion of success, backed by the illusion of high demand from other investors, becomes a self-fulfilling prophecy. The money pours in, not because the fundamentals are sound, but because nobody wants to be left behind. And what about the data nobody questioned? This is where the deception gets really clever. You'd think that with millions of dollars on the line, every number would be audited and verified. But the reality is often very different. How many times have you heard the excuse, "Oh, our internal dashboards are proprietary and confidential"? It sounds plausible. You don't want to give away your secret sauce, but it's also the perfect shield for hiding the truth. If the numbers are fake, the last thing you want is someone looking at the raw data. Then there are the delayed audits. Our accounting firm is swamped. We'll get you the audited financials next quarter. A quarter becomes two, and then the next funding round is already happening, making the previous financials seem old and irrelevant. Excuses pile up. That data is complex and requires context. We're in the middle of a system migration. These are all red flags, but in a climate of intense FOMO, they are often overlooked. Investors, eager to believe the hype, accept these explanations. They rely on the numbers presented in the pitch deck, assuming they are a faithful representation of reality. The truth is buried under layers of confidentiality, claims, and procedural delays. The most audacious lies are often the ones hidden in plain sight, protected by the simple assumption that no one would dare to fake the numbers at this scale. Now, think about the people inside the company. What happens when employees know the truth? This is the quiet, human tragedy at the heart of these corporate collapses. Imagine you're a junior data analyst. You see the real numbers every day. You know that the user growth is flat, not exponential. You know that the revenue figures being shared with investors are wildly inflated. What do? You're bound by a strict non-disclosure agreement, an NDA. Speaking out could mean getting sued into oblivion. Then there's the career risk. If you become known as a whistleblower, Will any other company in the industry hire you? You could be blacklisted. There's also a psychological pressure to conform. Your boss, your colleagues, the entire executive team, they're all celebrating this incredible success. Are you the only one who sees the problem? Self-doubt creeps in. Maybe you're misunderstanding the data. It's an incredibly isolating and frightening position to be in. People have mortgages to pay, families to support. The personal risk of speaking the truth often feels far greater than the ethical cost of staying silent. So, they keep their heads down. They do their work. They watch the lie grow bigger and bigger, feeling trapped and powerless. Just waiting for the inevitable day when it all comes crashing down. And it always does crash down. The pattern is remarkably consistent. It starts with a single leak. Maybe it's a disgruntled former employee who finally decides they can't stay silent anymore. Or maybe it's an investigative journalist who gets a tip and starts digging. At first, the company denies everything. They call it misinformation, the ramblings of a bitter ex-employee. But the leak opens a crack in the perfect facade. The media scrutiny intensifies. Other journalists start asking questions. Investors who were once blinded by FOMO suddenly start demanding the audits they had previously waived. The excuses don't work anymore. Once one piece of hard evidence comes out, a leaked internal email, a screenshot of the real dashboard, the entire house of cards collapses. The downfall is swift and brutal. The story flips overnight from visionary founder to fraudster. The media, which once celebrated their rise, now ravenously covers their fall. The rapid collapse is a spectacle, but it's the logical conclusion of a business built not on value, but on deception. It was never a real company. It was a story. And once the story was exposed as fiction, there was nothing left. So, what's the final lesson in all of this? It's simple. Numbers don't lie. People do. Data itself is neutral. A chart is just a collection of points on a graph. A spreadsheet is just a grid of cells. They have no agenda, no motive. The problem isn't the data. It's the people who interpret it, present it, and sometimes invent it. We have to remember to look beyond the slick presentation and the impressive headlines. We need to cultivate a healthy skepticism and ask the hard questions. Whose numbers are these? How were they calculated? What are they not showing me? The most important skill in today's world isn't just being able to read a chart. It's being able to read the story and the motives behind it. True success is built on real value, not on inflated metrics. And the truth, no matter how long it takes, always has a way of coming out. Thank you for watching. If you want to hear more true stories hidden behind the veil of success, and learn how to separate fact from fiction in the world of business, make sure to subscribe to behind the billion. We'll see you in the next video.